Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel that's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. Here are the key tenets to my approach for trading. This is the basis of my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the equity futures that I follow, the S&P 500 and NASDAQ, as well as the large cap tech stocks. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and ES is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the ETF version of that index, and NQ is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they will hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be talking about an underlying asset. For setups, for example, setups in Nvidia can be taken with shares of stock or options. So today was a very bullish day in Nvidia. The setup that I am going to talk about, you could buy shares of Nvidia or buy calls or sell puts or buy a call spread, and at your choice. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen, compulsive guy. Welcome. Glad you're here. All right, here's my agenda for today. Friday, March 22nd. Normally, I go over news items, economic data, and events. There was nothing significant today, so I'll move on to positional analysis. So I'll cover my positional analysis for today. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with positional analysis. I'm going to start with the S&P 500. This is the ES futures in Bookmap. And before I take a closer look at this chart, I do want to take a look at a larger time frame. I'm going to go to the underlying index. Again, that's SPX for the S&P 500. This is the current rally that began last year, October 30th, shown by this green trend line marking the low and the high so far. And that is SPX, since that October low, has rallied about 1,150 points. So quite a rally. All right, so that's a one-day chart in Thinkorswim. Now let's take a look at another SPX chart. Let's go to a 30-day 1-hour chart. So this green line, green dashed line, that's the top of the trend that I was showing on the previous chart, that trend line going from low to high. And so far the high for SPX, that's the all-time high, is 52.61. And that was put in after SPX broke out of this consolidation on Wednesday after the FOMC announcement and meeting. This wrong tool. Here's the consolidation. Then on Wednesday, SPX broke out of that level, made a new all-time high, and is now consolidating again. All right, let me focus on the levels on this chart. I'm going to zoom in just a little bit. All right, first of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. That is based on the closing price last Friday. I update those levels once a week. They remain in place for the entire week. SPX again broke out above the upper weekly expected move on Wednesday and continues to trade above that level. And now the lower and upper daily expected move, also based on the options market, are both above the upper weekly expected move. So that again is based on the closing price for SPX from yesterday. And I do post both of those levels in the Options Doug chat channel on Discord every evening. All right, Tacky in Discord did have a question about how to calculate, or how I calculate expected move. Let me show you real quick. So I just go to an options chain. This is Thinkorswim options chain for SPX. Let's take a look at Monday. That's the 25th. Let me open this up. Whoops. So what I'll do, I'll take this number right here, plus or minus 26.36. I will do that at the close today. So SPX will close at 4:15 p.m. Eastern Time. I will take that number at the close and add it and subtract it to the closing price to get the expected move for Monday. And do the same for the weekly expected move. I'll just take the Friday number. All right, so those are the expected moves. Also, the other levels on this chart are Spotgamma levels. These are proprietary Spotgamma levels. They're provided to Spotgamma subscribers, shown on a variety of trading platforms. Again, this is Thinkorswim. I'm going to point out the key daily levels. First of all, and this is really strange. I don't have much confidence in these levels. I'll show you why in just a couple minutes. All right, so 52.40. That is the put wall and the volatility trigger. So the put wall is the strike with the largest net negative gamma that can be expected to act as support. And the volatility trigger is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price edge to their delta exposure, that tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price edge to their delta exposure. That tends to subdue or decrease volatility. So that's 5240. So that's the volatility trigger and put wall. And then just above that at 5250 is the call wall and absolute gamma strike. So the call wall is the strike with the largest net positive gamma that can be expected to act as resistance. And the absolute gamma strike is the strike with the largest absolute positive and negative gamma. And that is where most of the gamma weighted open interest is concentrated. And according to the absolute gamma levels that we'll take a look at in just a minute, that's not the case. 5,000 should be the absolute gamma strike. So I don't understand these levels. Anyway, if these levels are correct, there's only a 10-point difference between the put wall and the call wall, which is very strange. So I always investigate anything that doesn't look right. All right, so those are the levels, at least shown on the chart. All right, let's wrap up our view of SPX with a 1-minute chart. So this is showing data from Wednesday on to today. This is the breakout above the upper weekly expected move on Wednesday after the FOMC announcement and press conference. Announcement, then press conference. Consolidation yesterday, then it started, SPX started to move lower, and it looks like it is finally breaking that downtrend and maybe finding resistance at that 5240 level. All right, so here's the cluster of levels. If these are correct. Put wall, volatility trigger, and call wall just above, very narrow range. All right, let's go take a look at Bookmap. So in Bookmap, I have my own cloud notes. So I can show, here's my column of cloud notes. So I can show SPX levels. And let's see. Here's one level that is in play. That's the 5242 combo 1 level. So that combines SPX and SPY gamma weighted open interest into one level. And that is shown in terms of an SPX price. I convert that to an ES price. Today there's a 60-point difference between ES and SPX. So this SPX 5242 level, I'm showing that at ES 5302. And this level just above, there are two lines here, right at ES, sorry, wrong tool, right at ES 5300. That's the 5240 level. That was noted as the volatility trigger and put wall. And that's just above the SPY 522 volatility trigger and put wall. All right, so again, I'm also showing SPY levels on this chart. Here's the SPY 5210 gamma level acting as support today. And then again, here's the SPY 522 level, the put wall volatility trigger. All right, shifts in levels for SPX, volatility trigger, put wall, and absolute gamma strike, all shifted higher according to the notes anyway. And then for SPY, volatility trigger, put wall, and absolute gamma strike also shifted higher, and the call wall actually shifted lower. So let's just scroll up on this chart just a little bit. All right, so here is the, well, let's see, I've lost the 523 level. Let me check on something just a minute. Okay, I get it now. All right, so the call wall for SPY is at 523, and that's at exactly the same level as the SPX 5250 call wall. All right, so there's again a 60-point offset between SPX and SPY, and then the calculation for ES to SPY also comes in at 5310. So interesting that the call walls are almost perfectly aligned, and the put walls are also and put walls and volatility triggers for SPX and SPY almost perfectly aligned. All right, so those are levels in play for today. SPX now breaking that downtrend, moving up. ES, SPX, SPY. All right, so those are the levels in play for today for the S&P 500. Let's take a look at NASDAQ. All right, here's NASDAQ, NQ futures and Bookmap. And I do want to take a look at the underlying index charts quickly. So this is QQQ. QQQ, 0 gamma level, 445. Here's the put wall and volatility trigger, also at the same level, 446 for QQQ. And let's see, 447. That's the absolute gamma strike. 447 absolute gamma strike. So very narrow cluster of levels for QQQ as well. All right, so it looks like earlier today, the 446 volatility trigger put wall was acting as resistance. QQQ broke above that level. Now the 447 level may be acting as resistance. All right, so there is something to these QQQ levels for NASDAQ. All right, so again, let's take a look at NDX. NDX also levels up above. Looks like it has broken the downtrend that began midday yesterday, now trying to move up to the levels above 18,000. All right, back to NQ. So again, I have my own cloud notes. Excuse me. So I can show NDX levels. There are none in play. Let me just zoom out. All right, so here's that 445 level. Large gamma 2, 0 gamma level. 446 put wall. Well, I should update the note. That's also the volatility trigger. And then there's the 447 absolute gamma strike that did act as resistance earlier. And now it looks like NQ is trying to break out above that level. And here's showing the 446 level acting as resistance earlier today before NASDAQ broke out above that level around 1245. All right, let's wrap up positional analysis by taking a look at gamma notional to see how market makers were positioned on the gamma curve at the beginning of the day. So this is gamma notional for the S&P 500 and NASDAQ. That's what I look at. Kind of an odd mix of shifts in gamma notional. For the SPX, positive, and this number became more positive than yesterday. In a positive gamma environment, Spotgamma assumes that for an index, traders are short calls, market makers are long calls, hence the positive gamma. They have to trade against price to hedge their delta exposure. And then all these other numbers are pretty much neutral. And they did shift for SPY, NDX, and QQQ. The numbers shifted slightly lower from yesterday, but basically neutral. All right, let's move on. Oh, I did want to show you the absolute gamma levels. This is for SPX. Let me zoom in on this chart just a little bit. So remember, I said anything that does not look right, I do take a closer look. So what this chart is showing is absolute gamma for SPX, and this is market maker's position. Orange bars are showing call gamma or positive gamma, and blue bars are showing negative gamma or put gamma. Remember, the absolute gamma strike is the strike with the largest absolute gamma, and I think it's pretty clear. And I added the numbers here myself, that 5,000 should be the absolute gamma strike. And really looks like the call wall should be at 5,300, and maybe 5,250 is correct. But 5,250 should not be the absolute gamma strike. All right, so just wanted to clarify that. All right, let's move on. So everything that we've looked at so far, other than Bookmap, is based on static data. So those levels are based on open interest. Spotgamma takes open interest data that's updated once a day, sometime overnight. They apply their algorithms to come up with levels. All right, now let's move on to execution. And the first thing I'm going to do is take a look at what options traders are doing today. So this is the hero signal. This is provided to Spotgamma subscribers. This chart, again, hero, H-I-R-O, hedging impact real-time options, is showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures, all into one combined signal. The white line is price for SPX, and the purple line is the hero signal. A falling hero signal indicates traders are taking negative delta positions. They are buying puts and or selling calls, and a rising hero signal indicates they are taking positive delta positions. They are buying calls and or selling puts. All right, let's zoom in on this chart. All right, what I want to focus on is a short setup, first of all. And this is normally when I trade in the morning. So a short setup right around 10:05. So notice right around 9:40, the hero signal moved lower, chopped, and then moved lower again. So there were really two shorts in the morning, one around 9:40 and one around 10:05, just following the hero signal. All right, let me check for questions. Hello, Anurag. Welcome, glad you're here. Anurag asks, does the hedging by market makers happen instantaneously, or is it within a few hours, somewhere in between that range? So it depends. It depends on the size. It depends on their position. But I think it's typically, in certain stocks, very timely and maybe lagging a little bit in the S&P 500, which is actually an advantage. That can set up very nice divergence trades. But here I think it's pretty clear that the hedging activity is happening pretty quickly as traders are buying and selling puts and calls. All right, so one thing that I do want to do is separate out puts and calls. Let me zoom in a bit. Actually, before I do that, I need to jump back. We'll take a closer look at that signal in just a minute. All right, so I'm going to... All right, so what I've done is separate out puts and calls. So the orange line is showing calls. A rising orange line indicates traders are buying calls, market makers are selling calls, and they have to buy futures to hedge their delta exposure. And a falling blue line indicates traders are buying puts. When traders buy puts, market makers sell the puts, and they have to sell futures to hedge their delta exposure. And when both of these lines are moving in the same direction, that's a very powerful directional indicator. All right, so let's look at these two short setups from the morning. First of all, the one right around 9:40. So initially, for about the first 10 minutes, traders were buying calls, took their foot off the gas, started selling calls. They sold puts for a few minutes, started buying puts again. So from around 9:40 to 9:55, both the orange line and blue line were moving in the same direction. Very powerful directional indicator. And the same thing happened right around 10:05. Call buyers took their foot off the gas, started selling calls. Traders resumed buying puts. Orange line, blue line moving in the same direction. Price moves lower. All right, let's go take a look at those two short setups in the S&P 500. So let's go back to the S&P 500. All right, here's the first short setup, 9:40, a break below this combo 1 level, as well as VWAP. That's shown by the light blue line there, VWAP. Volume dots are showing market buy minus sell. Green volume dots are showing they're more aggressive buyers. So again, volume that's delta, market buy minus sell. Green volume dots, more buyers than sellers. Magenta dots indicate more sellers than buyers. Price jumps up. Aggressive sellers start to come in as traders take negative delta positions. Price moves lower down to this 52.36 level that was noted as support in the AM Founders Note, Spotgamma AM Founders Note. Then again at 10:05, ES makes a lower high, reverses right around the 52.42 level. Aggressive sellers start to come in. Cumulative volume delta starts to move lower. That's shown by the magenta line in the subchart. Also, large traders were selling with iceberg orders. That's shown by the falling light blue line, also the on-chart indicators. And then sell stop orders help to fuel the move lower. That's shown by the falling yellow line as well. Also the on-chart indicators. Showing a big, that's a lot of stop orders in this context, not necessarily in absolute terms. All right, so those are the two shorts. First of all, the first one, 9:40, second at 10:05. Those are the confirmations of Bookmap and the confirmations in Hero. All right, let's go back to Hero now. All right, so here's the current hedging flow. Right around 12:35, traders start aggressively buying calls, start selling puts. Orange line, blue line moving in the same direction. And this is after some consolidation in the calls and prices moving higher. Looks like to above the high of the day. All right, let's take a look at NASDAQ. All right, NASDAQ, different story today. What I'm looking at, let me zoom out, is the signal for the Mag 7. What this is showing is options trades and market maker hedging activity for a combined signal of the stocks known as the Magnificent 7. That's Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. And I will tell you that Nvidia is definitely driving this this move higher. We'll take a look at Nvidia, really the stock of the day. All right, so this is showing, let me zoom back in these stocks, traders have been buying calls from the open, shown by the rising orange line. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. They've also been selling puts. That's shown by the rising blue line. Again, rising blue line, orange line moving the same direction. Very powerful directional indicator. All right, so let's go take a look at NASDAQ NQ futures. It's a great way to trade this basket of stocks since they make up a very large component of the NASDAQ 100. So 2 long entries as traders were taking positive delta positions in the Mag 7 stocks. First of all, long at 950. That's off the NQ 18,500 level. More long entries right at that same level. So that level acting as support. Entry point for longs 3 times today. Note on the last couple that large traders were buying with iceberg orders. That's shown by the rising light blue line. And here finally cumulative volume delta starts to take off and move higher. That's shown by the dark blue line in the subchart. Started taking off about 11 a.m. Some consolidation. Then NASDAQ breaking out right around 12:30, 12:45 as traders continue to take positive delta positions in the Mag 7 stocks. All right, let me check for questions. And Anurag asked, when the flow alert comes in, is there a way to tell whether it is for calls or puts? No. So let's go back to Hero. There won't be any alerts there. Let's see, I know there was an alert on Google. So typically the alerts are shown on the call line, but that doesn't, you can just logically tell that this is really based on call buying here for Google. That's what I'll cover this stock in just a minute. But there's really no way of knowing for certain. And Spotgamma says that those alerts, even though it's on the call line, there's no indication that it is for calls. The alerts, if you have puts and calls separated, the alert always appears on the call line, but it's not necessarily for calls, although you can just logically tell here. That's what's moving the call line. Picasso asks, can you increase your volume? Sorry, I have done, let me just check. All right, for YouTube, I have set my microphone gain at the highest level possible. So sorry, there's nothing else that I can do. And I have a headset and I'm speaking the microphone is right in front of my mouth. So I apologize. I've done everything I can. You maybe try and turn up your volume somehow. All right, so sorry about that, Picasso. All right, let's move on. First stock I want to take a look at is Apple. All right, next trade says, sounds good here. All right, thank you very much for the confirmation. So here's Apple. Remember, yesterday Apple was down pretty significantly after the news came in that the Department of Justice was suing Apple. It looks like dip buyers are coming into Apple today, starting right around 945, 950. Buying calls shown by the rising orange line, also selling puts, multiple flow alerts, and price continues to move higher as traders continue to buy calls. Looks like there's some consolidation now. Call buyers have taken their foot off the gas and put sellers, so both these lines are flat right now, maybe ticking up again. Let's go take a look at Bookmap. Let's go to Apple. Bullish day in Apple. This is classic absorption here. Right at the 170 level. Note this is the heat map and Bookmap showing a history of the limit orders in the order book. This is very typical for stock. These are limit buy orders. They typically come in for a stock at the cash open, remain there until they're filled, and it looks like traders were front running that high liquidity at 170. Aggressive buyers start to come in, shown by the green volume dots, as traders were taking positive delta positions, buying calls and selling puts, and Apple is moving higher, continues to move higher. Also note aggressive buyers coming in, shown by the rising cumulative volume delta. All right, the next stock, Google, we just took a look at that. Bullish day in Google. Let's go back to Hero. Definitely call buyers driving. Shown by the rising orange line. Flow alert right at the cash open. Traders buying calls. Not much with puts. They are selling puts, but compare the notional value. This is about 90 million versus 9 million. 10 times the size. Call buyers versus put sellers. Also notice, as the call buyers took their foot off the gas, price is moving sideways, slightly down. Very typical pattern. Aggressive call buyers in the morning. They took their foot off the gas pretty quickly, just right after 10 a.m. All right, so that's Google. Let's go back to Bookmap. Google, again, aggressive buyers, shown by the green volume dots, as well as call buyers driving price higher. They took their foot off the gas right around 10 a.m., and that was about the high of the day. All right, the next is Microsoft. Very clean downtrend in the morning, making lower highs, multiple entry points for short. This one at 429 at VWAP at this trend line. And then right around 1145, Microsoft broke out of this trend line, did a test of the 426 level, and is now moving higher. So let's go take a look and see what options traders have been doing. Let's go to Microsoft. So it was mainly call sellers in the morning driving price. So just comparing notional value, this is negative for puts, so traders have been buying puts, also selling calls. Call sellers much more aggressive, driving price lower. When traders sell calls, market makers buy the calls and they have to sell stock to hedge their delta exposure. Then right around 1140, they started selling puts and buying calls. Microsoft reversed higher. There was a flow alert that came in just a couple of minutes after the cash opened. All right, NC says your mic is good. All right, thanks for the confirmation. And K20Z3 asks, is this platform free, Spotgamma? No, it's not. I wish it is. Spotgamma has put in serious development effort on their infrastructure as well as the functionality of this, and they do charge for this, but in my opinion, it's well worth it. So no, it is not free, but in my opinion, well worth it. It provides substantial value, and I'm only looking at a small portion of what Spotgamma provides. All right, Picasso, I understand your problem with the microphone. There's nothing that I can do. I'm sorry. All right, so that is Microsoft reversing higher, zoom back out. Now moving higher, 430 is the call wall. So let's go back to Bookmap. All right, so there's the call wall at 430. Again, heat map and Bookmap showing a history of the limit orders in the order book. Typical for stock. They come in at the cash open. This very dark red band of liquidity indicates a large number of orders in the order book, again, that came in at the cash open. That's the 430 call wall, expected to act as resistance. And that liquidity often acts as a magnet for price for stock. So more absorption down here at 426. All those limit orders were not filled. And traders were front running that liquidity right before 426. Price reverses higher, now heading back up to the 430 level. All right, the stock of the day, Nvidia. Quite a move higher. So let's take a look and see what options traders have been doing. And before we do that, let's take a look at something else. So I'm going to go to Hero for Nvidia, and let's do some more investigation on Nvidia. This is Equity Hub and Spotgamma, so this is another one of the tools that Spotgamma provides for analyzing equities. This is Nvidia. What I'm showing here is the 10-day history of the key daily levels. That's what I focus on. This is a recent addition, this color coding of levels So if the level increases, moves higher, it's color-coded green. If it moves lower, color-coded red. So this is the change from yesterday to today. So the hedge wall moved higher. That's similar to the volatility trigger in an index. The call wall moved higher up to 950. We'll see that in just a minute. And the put wall did move lower. So I'm a little bit more focused on the, especially today, focused on the call wall moving higher to 950. That is bullish, as well as the hedge wall moving higher. Let's take a look at one other thing. What this is showing is the volatility skew for Nvidia. And this is showing implied volatility on the vertical axis, strike price on the horizontal axis. This is, let me show you first of all, let's take a look at SPX, a volatility skew. This is typical of an index. SPX, this is showing puts. Higher volatility for puts indicates an increased demand for puts. And this is very typical of an index. This is how traders, money managers will hedge their portfolios with SPX puts or put spreads. So that's for SPX. That's the S&P 500 index. Let's go back to Nvidia. This is indicating there's a very large demand for calls. Increased volatility for out-of-the-money calls and increased demand for calls. There's also a demand for puts, but this is typical of a stock that's in play like Nvidia. High demand for calls, implied volatility increases. All right, so now let's go take a look at Hero. And this is why there's higher volatility for calls and increased demand for calls. This is showing from the open, traders were buying calls. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. They're also buying puts. That's shown by the rising blue line. They're selling puts and buying calls. Call buyers more aggressive. This is quite a large number for a single stock. 3 billion in notional value. That's dollar notional value for calls. That is a very large number. And then 1 billion, 1.17 billion positive for the blue line for puts. So they're selling puts and buying calls. Both lines moving in the same direction. And Nvidia moving up to that call wall that did move higher from yesterday at 950. Very bullish day in Nvidia. And here's the first ideal entry point. That was right around, let's see when that was. Right around 950. Pull back to VWAP, that light blue line. Then there are multiple pullback entries after that to 925, 935, 940. So huge move in Nvidia driven by huge notional value and call buying. All right, let me check for questions. All right, K20Z3, you're welcome. Tape Reader 5 says, hey, I have an indicator, cumulative volume, delta pressure. And is this close to rising delta you were talking about a few minutes? Thanks, can hear you too. Good, by the way. All right, thanks for the confirmation. Indicator on TOS, not Bookmap. I don't know exactly what that is. I have an indicator in Thinkorswim called Volume Delta Study, and I think it refreshes every 20 minutes or something like that, so it's not quite the same. What this is cumulative volume delta for the entire day. So it's just adding up volume delta buy minus sell and accumulating that for the entire day. So I'm not familiar with that that study in Thinkorswim. You might take a look at the description or take a look at the code. All right, Floyd's Garage, welcome. Hello, glad you're here. Can you mention how you trade when skew is high? So I'm just showing that is an additional confirmation, something that you can do in an investigation that that will confirm a bullish entry for or bullish outlook for Nvidia. So my basis thesis for the day for Nvidia was bullish, based on the rising call wall as well as that rising call skew, that heightened demand for calls. And Anurag asks, is that 3 billion notional value for calls for Nvidia for today? Yes, that is for today. That is huge. That is quite large. That is on the let's go take a look at. Let's go back to Hero. Let's go to Hero. Let's go to the S&P 500. So I'm going to compare calls for the S&P 500. Again, remember this is SPX, SPY, ES Futures, and XSP, all into one combined signal. That is half the size of the call notional value for one single stock, Nvidia. So yes, Anurag, that is for today, and that is huge. All right, let's go back to Nvidia. All right, compulsive guy asked, when purple Hero signal is above below current price and the green 0 DTE signal is opposite above below current price, does one tend to dominate? How do you trade this? I typically do not look. I have not looked at the 0 DTE signal recently. I stick to the total signal. So let's take a look at. I'm going to go back to the total signal. Let's go to the S&P 500. All right, so what compulsive guy is asking about next expiry. All right, so this does provide some interesting information. All right, so there are two lines on this chart now. The purple line is the Hero signal for all expirations. So that is today, next week, next month. And the blue line is next expiration. And for the S&P 500, that is 0 DTE. That's options that expire every day. So that is showing options that expire today. You can see the very strong correlation and the close correspondence between the all trades, all expiration Hero line as well as the 0 DTE. So this is showing that the options trades for today are making up for options that expire today are making up a very, very large component of all the options trades for today. All right, so what I read into this is there may not be much long-term consequence to what traders are doing today. They're not worried about next week, they're just worried about today. We can take a look at, let's go back to Nvidia. Most likely a lot of this is, all right, so it's a little bit different for Nvidia. So this is also provides some good information that traders are taking longer term positions in Nvidia. So the longer term, all trades, so today, tomorrow, today, next week, next month, that's about twice the size of options that expire today. So they are taking positive delta positions in options that expire today, but that's just about half of the total. All right, so compulsive guy, thanks for the question. That does provide some additional clarity. So this indicates that traders are long-term bullish on Nvidia, taking longer-term trades. So let's turn that off. All right, you're welcome, Floyd's Garage. All right, let me check for additional questions. All right, I've got about 5 minutes left. Does anyone have any stocks they want me to take a look at? Let's check on the S&P 500. Still very strong correlation between options trades and hedging activity. Let's go take a look at Bookmap. Go back to the S&P 500. So now S&P 500 finding support at the 522, 5240 put wall volatility trigger, multiple combo level there. All right, Tape Reader says, thank you, good session. Thank you for your kind words, and you're welcome. All right, let's check on NASDAQ. Let's go back to Mag 7. All right, traders have taken the foot off the gas. It's about almost 2:30 p.m. Certainly makes sense. After a bullish day, taking profits. Let's check Nvidia again, the driver for today. Note there is often a very, very large similarity between the Mag 7 signal and the Nvidia signal, and that's certainly true for today. Options traders taking the foot off the gas, then Nvidia now starting to roll over just a bit. Let's go back to Bookmap. Back to Nvidia. All right, so Nvidia consolidating now between 940 and 945. Let's just see what's up above. All right, looks like I need to add more levels, and just as I expected, there's a large band of liquidity up at 950, and also sellers at 949 and 948. So I need to adjust my levels in Nvidia after the rally today. All right, Tony K says thumbs up for Doug P, please. Yeah, please. If you like what, if you like this, if you like what I'm showing, yeah, a like would be great. A thumbs up would be great. All right, so consolidation between around really 940 and 947 as options traders have taken the foot off the gas in Nvidia, which is driving the Mag 7 and driving the NASDAQ today. Let's go back to Mag 7. All right, last call for stocks. I've got just a few seconds left. Go back to Bookmap, Nvidia. So the question of the day is, will the aggressive call buyers come in again at the open and take Nvidia up to 950? So I'll keep an eye on that. I'll post anything in Discord if that happens. Oh, KP wants to take a look at RTY, IWM. Sorry about that. I'll get to that right now. All right, so let's take a look at IWM. I don't think there's much. Well, first of all, RTY, I don't think there's much. So let's go take a look at IWM. Take a look at that first. There's also a combined signal for the Russell 2K. This is why I really don't trade IWM, the Russell, and the Russell 2000. Just typically not a very strong correlation between the the IWM and options trades. Hero signal really moving in the opposite direction. All right, let's take a look. There was a combined signal. Combined signal of RUD and IWM. Same thing, not very strong correlation. So this is KP. This is why I really don't trade these instruments, the Russell 2000. There's just not a strong correlation between options trades, market maker hedging activity, and price action. You know, certainly nothing like the S&P 500 and NASDAQ and the large cap tech stocks that I follow. All right, Anurag asked, that is if we have to earn a living doing this, how do you suggest we start? So that's a loaded question that would take some time to answer. First of all, I would say if you have to earn a living doing this, then I would find some way to generate some income while you're learning. So then you have to learn, and in my case, you would, what I'm showing you, would have to learn Bookmap. Bookmap provides plenty of tools for learning the basics of Bookmap, plenty of streamers for learning in a variety of ways of trading, and then from what I'm doing, learn about Spotgamma as well. All right, so you just have to thank Stephen for helping to answer that question. All right, everyone, my time is up. I want to thank you very much for your questions and comments. Thanks for watching. If you like what you saw today, give me a thumbs up. Have a great weekend, everyone, and I will see you on Monday. Bye.